Hey guys, I'm Apeksha and I welcome you to this video series which is dedicated to learning the basics of stock market. So today we have another topic for this discussion, which is what is an IPO. So today we will discuss certain things which are important related to IPO, as to what is an IPO, why does the company come up with an IPO, and how do you actually go ahead and apply for an IPO. Now let us move and take our one step forward to the goal of becoming market ready. So yeah, let's get started. So IPO, first of all, understand that the full form of IPO is initial public offering. Initial means the first time when the company goes public, then it is called as an IPO, which means that the company launches the shares or offers the shares, gives the shares to the public in general, people like you and me. So this is the first time when the company goes to share market and lists itself. So we already spoke about listing, right? So when the company admits itself to the share market, then it means that the company is listing. So that's what the company does here in an IPO, right? Now one thing might pop up in your mind as to why would they do that. For example, if I am starting my company with one more person, both of us have 50-50% stake, and why will we want other people to become the part owners of our company, right? This will take us to the question as to why would the company even think of going public or think of launching an IPO. So there are quite a few reasons as to why they might do that. So first and the very obvious reason is to raise capital. Now whenever the company starts its business and when they need more funding, what do? They will initially go to their relatives, family members, friends, but after a certain point they need more funding, right, for a long term. Then the one option that is left with them is share market, is going to public at general. You may say that okay, they can take a loan, but when they take loan they need to pay back that amount, right? And they also have to give the interest. So it becomes difficult for the company to give the interest on a monthly basis or on a quarterly basis. So here this money they are getting for long term, so of course they will go to the share market. So this is one probable reason, to raise the capital to expand the business. Yeah. Next is exit to the promoters. Now for example, both of us are starting this business, and eventually if you want to exit, you say that okay, now I want to take an exit, so what will I do? Now that's why I have to come up with an IPO where your 50% stake will go to the other people at general, and then they will give us money which will be taken by the promoter, which will be taken by another partner, right? So after a certain point the promoter has to exit. That is one reason. Next, let's come down to branding and liquidity. So what happens is when the company is listed on the stock exchange, people are aware that yeah, there is this company. Now for example, if we talk of Reliance or Tata Group, all of us are aware of Reliance, Tata Group, Aditya Birla Group. Why? Because these companies are listed, right? We keep listening about them. And at the same time, because of this branding activity, they get more business. People are aware of them, they get more clients. So this is one positive factor for them. And next is paying off debt. So at times the company which is debt ridden, even they may come up with an IPO that we need this money to pay off the debt. So these are not the only reasons, but quite a few reasons and important reasons as to why most of the times the companies come up with an IPO. Now, once we understood that what is an IPO and why the company may launch an IPO, now we can move ahead as to what do I do or what should we do if we want to go ahead and invest in this particular thing called an IPO. So before investing, there are certain considerations that you have to take care of, right? You will just not directly go and invest in an IPO. What you will do is you will think as to, okay, whether the company is good or bad or worth investing, right? For that, what you will have to do is you will have to go and check the DRHP of the company. DRHP, which is Draft Red Herring Prospectus. So whenever the company wants to come up with an IPO or list itself on the exchange, it has to make this or prepare this document which is called as DRHP. So DRHP has got all the details related to the company, right from the shareholders to the entire story of the company from its beginning, and the financials of the company with risk factors involved, and importantly the objective as to why are they coming up with an IPO. So we will have to go and see this document, understand everything about the company, the risk factors and everything I spoke about, and then only we will take the decision, right? So whenever they come up with IPO, they have to have this document and they have to submit it to the stock exchange plus SEBI, which is the regulatory authority. So SEBI is Securities and Exchange Board of India, and it is the regulatory authority for our financial market. So they gotta submit these documents there, and this is how we investors will come to know about what the company does. Why do they need money? Why should I pay them money? Okay, how much is the share worth? So these details will get clear once we go through that document. Then we can go ahead and invest. Now, how do we invest is pretty simple. We already spoke about demat account, right? So if you want to be the part of share market, first thing you have to do is open a demat account, which is like your bank account. So after opening the demat account, what you have to do is you can directly maybe do online process of IPO, or else just take a offline form from your broker and submit it, right? So when you submit this, what happens is you will have to keep that much amount in your bank account. So for example, if I am planning to invest 50,000 in an IPO, then I have to keep that 50,000 in my bank account, and that money will get blocked for 3 days, because usually the IPO is open for a span of 3 days, and they tell you in advance as to what are those 3 days. And at the same time, when you fill the form, you have to give your bid. Now, what does that mean? There is something called as price band. So there is lower price band and upper price band. So for example, the company may come up with a price band of 500 to 510. Then you have to place the bid. So you may place it at lower price band or upper price band depending on your analysis, right? So this is how you read all the details of about the company in their DRHP, which is draft red herring prospectus, and then you can go ahead and invest. So one more thing let me tell you is, initially when the company comes up with this draft, it is called as DRHP because it is draft, and once it is approved by the stock exchange and SEBI, then it becomes RHP, red herring prospectus. So draft, if it has some problems, or if the SEBI thinks that, oh, we need more details about your company, so please do that, then the company will do that, and after everything is done, it becomes a red herring prospectus. The draft is removed from that, so it becomes RHP, right? So this is how we go ahead and invest in an IPO, and we become the part of that company. Okay, I hope the process as to IPO, listing, and how does the company become public is understood. We will come up with more such videos and we will share our thoughts about it. So this was very basic. We will go one notch higher as and when we proceed. Okay, so stay tuned guys for more videos, and thank you so much.